underlying, but you're not, because then you have to deal with data. You have to deal with place and who is or isn't to say that we continue to be in this quote-unquote bearish market or we trade sideways for a while. Then from our perspective, you would be better off stacking sats versus depending on another country, I mean, not country, but another company and or country as well to sort of kind of fill in that gap. So it all depends on, unfortunately, market timing for a lot of people, which sucks. Versus if you're just hodling, then you can sort of kind of see your way through versus having this additional bias in your mind, if you will, that strategy, NVIDIA, et cetera, whatever company that you name, especially treasury companies, are going to outperform Bitcoin and just be this thing long term. I think I remember we used to, well, let me not say we, but people used to look at mining companies as that additional leverage piece, and now it has rotated into treasury companies and or the ETFs. And by the time you account for fees and a whole host of other things, is it better just to simply bet on Bitcoin, or are you going to bet on people that are betting on Bitcoin that also have additional risk?
Yeah, kind of to bounce off that last point there. One thing I find interesting for myself personally, getting into Bitcoin so early in in my investing life, I like a lot of clarity when it comes to anything I'm investing in, and I find it kind of interesting that a lot of Bitcoiners are willing to go into some of these stocks just because you don't know exactly what's going to happen with stock dilution or anything like that. So, to me, I'm going to probably just stick with Bitcoin. Whatever MicroStrategy wants to do, they could do. But yeah, that's just kind of a thought of mine.
No, I like that. So we got kind of two different ways of thinking about it in the crowd here, which I think is fair because we saw that this cycle, right, where there was a difference between people thinking I'm going to do this treasury company thing, and then I'm going to do just hodl Bitcoin for long term, put in self custody, and you can do both at the same time with different portfolios as well, right? So there can be different purposes for things. So a few more nuggets I'll throw in here as we're kind of going through this story, and welcome to the new people jumping in. If you want to grab a mic and give your thoughts on things, feel free to do so. It's kind of like an open mic conversation for news. So there was the Danny, what's his last name? What Bitcoin Did? Danny Knowles podcast with Michael Saylor that happened, I believe, the beginning of January. That was pretty testy, right? That was pretty testy going into a bad share price for MicroStrategy. I wonder if there's any thoughts on that conversation between the two of them. My personal takeaway from it was that I didn't think it was a great representation of what MicroStrategy is trying to do for the long term and trying to bring people into that market. Because I do think that Danny was bringing up a solid question. For those who kind of missed the episode, Danny's a podcast host for What Bitcoin Did. I think he's done plenty of shows upstairs here at PubKey. And he's essentially was asking Saylor, why do all these companies need to buy Bitcoin? And if they are doing that, are they competing against each other? Is that bearish long term for this type of company, this DAT, digital asset treasury company? Saylor got pretty defensive, to put it lightly, and kind of bit off Danny's head. So that was kind of funny because Danny dealt with it like in true Australian, just let it happen, just kind of backed off a bit. But I think for me, out of that, I'm not sure I'm totally in agreement with Saylor. Saylor was hey, anyone can buy Bitcoin. It only helps the market. If a person buys Bitcoin, if 10 people buy Bitcoin, 100 people, that helps the market. If it's a company, 1 company, 10 companies, 100 companies, that only helps Bitcoin. But from a shareholder perspective, what you just kind of brought up is there's so many different ways for people to purchase Bitcoin, and the means of going about it really matters. So that was my thought. But what are your thoughts on it?
Watching it, I like Michael Saylor a lot, and I like Danny a lot. But I absolutely think that Michael Saylor was waiting for him, and he was waiting for that question, and he attacked, and he was ready to do it. Sorry to say it, but it was just very obvious to me. He was ready because Danny had been saying that. He has consistently been saying that point for months on all of his episodes. And then when he brought that question up, Saylor was like all ready for him. And it would have been much more interesting if Danny pushed back, because he definitely has, because he's made them on all of his previous episodes, all of the very rational reasons why other companies, it just doesn't make sense. Like there's one, there can only be one MicroStrategy. And instead of Saylor just being like, yeah, I'm the GOAT, and like, I'm the best at this, and he should have gloated in that like respect that Danny was showing him. Instead, he was like, he was trying to be like, no, you should be encouraging everybody and their mother to buy Bitcoin so it goes up. And it just was like, I don't know, it was very obvious to me that Saylor was like trapping him. And Danny was like a gentleman about it, but it would have been much more fun if like somebody from New York did that interview. That's what I was thinking. I was thinking like if a New Yorker was doing this interview, man, it would have been ugly. But it was fun to watch, to be honest. It was a lot of fun.
Do you agree with Saylor or do you agree with Danny?
I think they both have points. Like, you know, Saylor is like, Bitcoin is for everyone, and every company has a different perspective and a different reason they buy it, and, you know, Bitcoin is everything. Sorry about that.
Put him on the phone, ask him the same question.
That's Saylor calling me now.
Yeah, Saylor's got your
So I think Saylor has a point, but Danny has a point too, that it's like, why do I need to like buy like, you know, like flowers.com became like 1-800-flowers.com, you know, like,
Yeah.
Oh no, 1-800-flowers became 1-800-flowers.com like the day before, you know. It's like the same idea, like all of these companies that are essentially like, you know, not doing well, now all of a sudden they're buying Bitcoin and getting a bid.
Well, we can take you off the hot seat.
My family is like, yeah, anyway.
And the other nugget that I wanted to throw in there was just the fact that Strategy did publicly talk about like that pain point of $8,000 Bitcoin. This is a little interesting to me. They obviously got a lot of questions around it. Once you go under your cost basis, people are going to be asking like, yeah, what's your liquidation point for like this long strategy you have going on? The fact that they like, gave out a number seemed kind of odd to me. I think from a public comps perspective, you might not want to do that. Might just be like, hey, we're fine. But, you know, they kind of gave out like their hunt number for companies to look at them and be like, where can we start putting some pressure on them? It's obviously a ways away, and hopefully we don't see $8,000 Bitcoin this cycle, 'cause it might be kind of tough for all of us. But that was an interesting point from a comps perspective on this story. So we can leave the fair shores of MicroStrategy unless anyone has any other follow-up thoughts on it.
Two things. On the 8,000, I think what I took from that, when I saw that, I was like, same thing. I was like, why would you reveal your position? I think it's confidence that it's not going to go down to that point. They're so confident that that won't be the position, so they'll never have to act on that and actually go through. And funny enough, I was thinking the same thing about I was like, why would Saylor go on right now? Like, what a I think he was 100% waiting for that exact question. He is a very calculated in the best way. He's very much, I believe, one of those people that he can see every route of a situation and prepare for any A, B, C, D scenario, and that's exactly why he went on with that. And I think that's a testament to the wider Bitcoin community, is the ability to have those conversations and know there's going to be a disagreement, but go through with a fruitful conversation and not just shut down and only talk to the people that you agree with, and have disagreements publicly. And in some cases, whether it's talking about your exit strategy, being sometimes it's a little too public with the conversations. But I think the inverse of that is what we have in just mainstream America, where everything's private and there's no information that's circulated. So I think it's a better problem to have than not.
Yeah. We got another taker. I will say Danny's follow-up podcast, I think he did with some, I don't think it was Hodl, it was someone else. I know the face, Mark. Yeah, funny. He's like talking about the interview and definitely that one's worth following up. That was like really good. What Bitcoin did drama.
We all watch the same shows, right? I think three things. One, revealing the 8K alleviates a lot of FUD, right? Because when you hear snippets or articles or things, it doesn't give a percent that MicroStrategy is down, typically. It says they're down 5 billion on the position, right? Like unrealized this and unrealized that. in the mind of an average person, I would say, I'm using average loosely, is that you see that number, then you think that this is really significant, not taking into account the actual position and some other things that are there. So that's an easy way to just push back preemptively against a lot of the potential FUD that can come out, and then the volatility that could actually cause an MSTR. That's one. Two is also that if you're willing to talk about that, that means that you typically don't have too much to hide, and it shows confidence against the backdrop of a falling market. Which some people then would say, hey, like, we can do Bitcoin, we can do MSCR, we can do all of these other things, or Bitcoin treasury companies aren't really going anywhere, although I definitely hold a different position than that. But I think three, on the Bitcoin treasury company piece, is that from a risk-adjusted perspective, if you do have a company that is failing, that has cash and some other things, what quote-unquote better investment to make than to get rid of fiat that is depreciating and then go into an asset that has a compounded annual growth rate of whatever percent people want to attach to it, right? At this point, it's just better use of the capital, especially if you're not paying out dividends, if you're not doing R&D. It is like, yeah, this thing over a 2, 3, 4 year time period typically will return X. So you just need to figure out a way to operate more efficiently, which is sort of kind of what we're seeing, right? And it's almost reminiscent of just attach AI to something, or attach this other thing, HPC, to something, or attach whatever it is to it. Oh, now we're in Bitcoin. Here comes the money.
Yeah.
So I think that those three pieces hold. And I don't think that there's anything inherently wrong with companies adopting Bitcoin in that way and adding it to their balance sheets if they will. I think that the overall piece, though, is how much leverage is being used, and can they then sustain those prices without unwinding? Because that becomes the key piece. MicroStrategy can maybe maintain it for however long, and Sailor can say, we're never going to sell. But it's other companies that cannot maintain that, and if they thought that price was going to 200,000 or 1 million, and now we're in the 60s or 50s or however low that we drop, that looks vastly different on a company's performance, and then what do they owe to their shareholders?
Love it. I'm going to throw it up to the next topic. So we got like 5 more to go. Bitcoin difficulty posts historic 11% drop as winter storms and price headwinds batter Bitcoin miners. We actually just put out a story right before I came over here about how difficulty just went up 15%, so 14.7%, if you want to be super specific. So this was the 9th, and today is, again, the 19th. So over the last 2 weeks, we've seen a change. I think we put out the story maybe like a little bit late because it's not exactly 2 weeks between those dates, like 10 days. But the story here is like in January, it's pretty cold, if you remember that. I don't know if you guys were around New York. It sucked. It was awful. It was like -10 for a while, tons of snow. But throughout the Southeast, where there's so much Bitcoin mining, there's essentially this energy belt from Texas to Georgia, where a lot of these data centers are being built, and Bitcoin miners basically filled in that entire area since 2021. All these small substations, 5, 10, 15 megawatts. It's not uncommon to see a little Bitcoin mining hut next to them if you're driving through the area. And so when that cold freeze came through, all these Bitcoin miners had to shut off for a variety of reasons. Sometimes it was just like too cold to keep someone on staff there, and so they shut off. Sometimes it was giving energy back to the grid. Sometimes it was a mechanical failure. But that led to this really large drop in Bitcoin difficulty over that period. We also saw Bitcoin price correct pretty heavily, obviously, December to January to the beginning of February, which was a double reason why. So it would be nice if Bitcoin price had stayed up during that period and difficulty had gone down for the miners who were able to stay online, because then you'd earn more in hash price. Hash price broke below $30 for one of the first times ever. I think the first time ever. Hash price is a measurement of Bitcoin mining revenue. It's measured in petahashes per day. So a petahash is a measurement of amount of miners. I think it's like 10 ant miners or something like that. Someone can correct me if my math is wrong. It might be another zero in there. It might be 100. But essentially, the hash price value gives you a good ballpark of how much a Bitcoin miner can make in a certain period. It's never been as low. It's never been as bad. We've never been down so bad in Bitcoin mining as we are right now. And as of just a few hours ago, we had a 15% increase in difficulty. So all the nice parts of this difficulty adjustment, the 3-4 consistent downward difficulty adjustments where it became easier to mine Bitcoin, has just suddenly been reversed, and we're back in the same spot. Hash prices at like $29 a petahash per day. It's pretty brutal. I would not want to be a Bitcoin miner at the moment. I think that's why you're seeing the transition to AI happen so quickly among some of these companies. One thing to note, though, is it's really hard to transition to AI HPC, and we've seen some of these Bitcoin miners who are trying to pull that off get downranked from the banks and saying, like, we don't know if these guys can really execute on top of this. So a few of those is like Hive, Bitfarms, Bitdeer have been kind of smacked for their execution risk in trying to turn into AI miners or AI HPC providers. I don't have too much more on this one. I think it's the numbers speak for themselves, but I'm open and the mic is floating around if anyone wants to jump in there, ask questions, or just has commentary on it. Not as interesting as MicroStrategy. I take it. That's fair. Maybe this next one will interest you guys.
So the mining difficulty is supposed to go down when there's less miners, right? Correct? And you're saying it just went up? This is just breaking news?
I mean, it's sort of breaking news. Just happened around 3 hours or so ago. Yeah.
Do we know why it went up?
So it went back up for a variety of reasons. I think difficulty happens over a 2-week period.
Right.
Over the past 2 weeks, miners have been coming back online. The cold snaps has kind of gone away, so that's part of it. I think Bitcoin price has slightly rebounded, so maybe some miners are kind of at that effective hash price where it's like, okay, it's probably worth us being online for a little bit. New deployments could be another reason. There's always people plugging back in. I think we're really just seeing a normalization back to like a normal level of network hash rate is what I would posit, though.
So we're speculating why it went up, basically.
Totally.
Yeah, because 2 definitely went off. I can't remember the 2, but there were 2 big mining companies that they're going to do AI mining because there's more money with the data centers, basically, right?
Yeah, so over the cold snap specifically, a bunch of miners, what they call curtailed, so like Mara curtailed, CleanSpark curtailed, some of the smaller guys like Cathedra curtailed, and then the big guys, over time, it's been the transition to AI HPC. And they're like a little slower in terms of like turning off. There could have been like some of these mega miners, like they shut off an entire container, or they shut off an entire building to start swapping over units. That typically takes like 3 to 6 months to kind of do that process.
Right. Do you think we could reasonably assume then in 2 weeks from now it'll start to go back down? Just if there's less miners, then the cost of mining will go back down in 2 weeks?
Depends really on what we see the next 2 weeks in terms of weather, I'd say, in the U.S. It's so tied to weather at this point, especially if it's cold. If we get a cold snap again, people will turn off for a little bit. That can affect it. And then I think it really depends on if we see larger deployments. Before this period, we saw very minimal changes in difficulty up or down, plus 1%, minus 1%. I think we could see more of that going forward if the weather holds. The long-term effects of AI HPC, I don't think you necessarily see large chunks of hash rate come off the market, because I think there will always be marginal additions in tons of jurisdictions like Russia, China. So I would say Core Scientific turns off, an exahash of Bitcoin mining. There'll be another exahash somewhere else turned on.
I don't want to dominate the mic, so if anybody wants to speak, go ahead. But these companies are going to lose money. If the cost right now is about $87,000, if you went up 15%, I'm assuming that now it's like 90 or over 90,000 to mine a Bitcoin, or for the mining. They're going to be losing money because right now the price is only 66,000 or 67,000. How long could these companies sustain to lose money? More will have to go offline if they're losing money. My point being is more are going to go offline. If this sustains the price at this rate, it's going to reduce the difficulty. That's, my assumption. So
Yeah, no, it is like that for some of the miners for sure. Like some of them are between a rock and a hard place. I would not want to be in the business of Bitcoin mining, and instead I chose a more lucrative, which is Bitcoin Media. It's almost as difficult.
can I ask a question though? Sorry
Yeah.
I got here late. Have you guys touched on Clarity Act?
No, we haven't, but we can definitely add that one into the list of topics. Are you game to do that?
Yeah.
Cool.
If everybody else is, yeah.
So let's do this Epstein one because it's kind of fun. And then to your question really quick. So not all miners are mining at $87,000, $90,000. That's kind of a generalist number you'll see on a lot of dashboards. It depends on each miner and their profile of miner on the rack, energy mix, the units that they've, like the containers that they've purchased. Depends on some of the derivatives and hedges they've purchased for their energy contracts. So like CleanSpark, for example, mines for under $50,000 a coin. CleanSpark.
Really?
Yeah, they got it. They got some margin there.
Earnings though today, they lost like 300 million or something. Was that today or yesterday?
CleanSpark lost 300 million.
I thought I read that today, but I could be wrong.
BitDeer did a $300 million.
For the last
Oh yeah, so a bunch of companies mark to market the digital asset value in their books went down. Like Galaxy went down a ton. I'm sure CleanSparks did too, because of how they changed the accounting rules is kind of brutal. They wanted it, but it's also kind of brutal. It's good on the up, bad on the down. But yeah, so for the mining, some miners are definitely in the red. I think Mara is one that's probably in the red because they're one of the more expensive Bitcoin miners out there. They have a lot of hosting contracts, a lot of third parties. Some of the other ones, not as much because they are more self-owned in their stack. We'll add Clarity because that's a really good topic I actually hadn't thrown in here, and we have not gone over it yet. But I will do this Epstein one first because it's a little bit fun. It's super fun. I mean, I think the conspiracy stuff is fun. Obviously, the Epstein background is pretty disgusting. Has anyone read anything on Epstein and Bitcoin yet? Is that 1, 2 hands? Okay, so this is pretty new. Would it be helpful to give some context, like writ large? Or no? Yes? Mike is... Yeah, there's a few. So like the background is Epstein, obviously you don't need his background, but his Bitcoin background was around 2010, 2011. He started getting involved in tech investments, a lot of San Francisco venture capital folks, and then he got connected to the Bitcoin scene through that. There's a few early Bitcoin developers he was talking with, like Amir Taki, who really well known at the time as one of the few Bitcoin developers. Kind of crazy dude. He went to fight in like the Syrian civil war. He's kind of a nut job. He lives in Switzerland now and is doing his own thing. So Epstein got to know some of these early Bitcoin developers, and I think the passive interest was just investments. Epstein was known for having a lot of investment stakes in multiple venture firms. He had his own venture firm. Then he got connected to MIT, which was running one of the larger Bitcoin initiatives at the time. And so he funded that project directly at MIT. And then he also used the connections from MIT to put investments into some of the newer Bitcoin startups at the time, circa 2014. The biggest of that year was Blockstream, which I think everyone in this room probably has heard about. This is where the conspiracies really start getting out of control in terms of Bitcoin, because Blockstream is most well known for the L2 network liquid, and then also trying to constrain how people thought about big blocks or small blocks. And they were definitely in the small block camp in the 2017 Bitcoin hard fork war. People now are speculating that Epstein and his involvement with Blockstream was pushing this narrative of small blocks. And we've seen a lot of the Bitcoin Cash folks and people from that hard fork war kind of come out of the woodwork and start talking about how Bitcoin Core has actually been captured from a governance standpoint from the beginning by the Epstein cabal and a bunch of others. We did some writing up on this. We'd spent some time reviewing a lot of the files. I don't know if we're allowed to curse at PubKey, but I think it's a lot of horseshit. So it's not... It's a pub, right? I guess I have heard Thomas spew. Oh, true. Yeah, that's so true. You guys have a great Twitter account. Shout out PubKey Twitter. There's not a lot of substance to all these things. They're interesting for sure to see kind of like some of these early conversations around like how Blockstream was funded or how some of these things at MIT got off the ground. One of the famous first initiatives from MIT was giving out Bitcoin to all the students. Epstein essentially funded that. So if you go back in Bitcoin history, you can see some of these like weird links. There's a lot of Bitcoin developers that were in contact with Epstein through about 2018, about 1 year before Epstein's death. So that's also adding some pressure to some of those people who are actually very much so still involved in Bitcoin development or in the Bitcoin ecosystem. I'll pause there if there's any thoughts on that one, but I wanted to get to it because I thought it was kind of interesting after some of the other conversations.
I just do a point. He gave $525,000 to Blockstream, and he gave $3 million. This is in April 2014. He gave $525,000 to Blockstream, $3 million to Coinbase. Those were his investments. And in 2018, he gave another $500,000 to MIT Labs, DCI, Digital Currency Initiative, or something. So those are the actual numbers. Yeah.
Yeah, the Coinbase one. I'm glad you brought that up. It seems to be, we covered that in this article. It seems to be that he was brought into knowledge of that Coinbase investment through Brock Pierce, who is the child actor from Mighty Ducks, if you've ever seen that movie. And then he's also the co-founder of Tether. So that kind of gets into this whole other conspiracy of, was Tether playing this long game that they like want to control the tokenized market and introduce a stable coin, and like the way to kill off Bitcoin, which was its only competition, was to force this hard fork war between small blocks and big blocks. Kind of seen it all this week with some of the technical conspiracy theories around this one, which has been really, really fun. But it's quite a rabbit hole. I think we can, we got like 2 or 3 more. We can move past this one quickly. Bitcoin slipped past 70,000. Crypto sell-off is widening. I don't have too many thoughts on it. If anyone has any thoughts on price or wants to dwell on price for a little bit, we can talk about it. I think there's more sellers than buyers at the moment. That's my take on it. But okay, we'll keep moving. I should put that one a little earlier. That we did kind of cover with the strategy stuff. Okay, so this is my second to last one, because we'll do the clarity after this one. But Tether launches open source Bitcoin mining management software, Mining OS. I think this was kind of a sleeper story out there. Tether has a huge ecosystem I don't think people are very aware of. Like, not only are they one of the most profitable companies on earth, especially in terms of profit per employee, but they have a ton of different Bitcoin tech solutions they're working on. This one they've been working on for about 2 years. I mean, I heard some things about it over the last 18 months. And then they launched it beginning of February. Essentially kills a lot of the third-party software that's out there in the market right now. So some of those guys are going to be out of a job and be looking for new things if this gets implemented across the board. There is this middle management software in all mining sites where, if you're a Bitcoin miner and you have 10,000 rigs, that's 10,000 little profit centers for you. It's also 10,000 little problems. And to be able to put all these units into like one dashboard, you typically need some sort of mining management software. Just like you'd probably have at PubKey for like, keeping track of inventory, things like that. It's just a little bit more dynamic since they're hashing. Tether built the software. They're putting it out to the market. Again, there's a few competitors out there. The reason this one caught my eye is just the fact that a company like Tether is like, 1, building something like this, and 2, giving away for free. And I think it's like a very Bitcoiner kind of story, like giving to this like open source mandate in the ecosystem. The other part is that Tether is one of the largest Bitcoin miners on earth. And so while we have, of course, Scientific, Riot, CleanSpark, all these other companies, Mara, jumping out of Bitcoin mining, Tether is going deeper into it, and they're also building custom software for it. So if the most profitable company on earth is doing something like that, then I think there's something to it. Any thoughts on Tether open sourcing its Bitcoin mining software? Okay, no takers. Let's do clarity last. Do you wanna take clarity? I can kind of give a riff on it, but it seemed like you knew more about it.
Yeah, I do it for the company. I work for Breadcrumbs, a blockchain analytics company. I think the act, just as the Genius Act, was meant to be a bailout of the banks because they want to ban yield on stablecoins, on Tether or USDC. If you just deposit your money like into a stablecoin at Coinbase or whatever, you're going to earn 4% yield. You put it in a bank at Bank of America or JP Morgan, you're going to earn like less than 0.1%. So they want to ban these coins. And the CEO of Bank of America came out and said, if this is allowed to continue, and this is according to a U.S. Treasury Department study, that traditional banks will lose $6 trillion in deposits like rapidly to these exchanges. So the Clarity Act would ban companies like Coinbase, Kraken, Gemini, or any exchange or any service provider at all, any centralized wallet, from offering yield. You put your stablecoin with them, they're banned from giving you 4% interest. Basically, they're trying to force you to go back to the banks. And I don't know, I don't know if everybody uses X or crypto Twitter, or it's called Crypto X now. There's this like thing going on now of like, oh, no bailout for Bitcoin, no bailout for the industry. It's a total psyop because the bailout is for the banks in the Clarity Act. So that's just my basic thoughts. I'm curious what your thoughts are on it.
No, I think I'm at the same place with you. I was wondering if there's any updates. I was just scrolling Google because it does seem to be like getting closer and then having a step back. So the backstory for it is like we had the Genius Act that passed last year, and that gave a lot of more clarity around some of the situations with Bitcoin, blockchains, whatever, and Capitol Hill. But it wasn't like the thing I think that a lot of people wanted. Like the Genius Act was great, but Clarity Act does give that more defined guidance on what we're going to do with stablecoins and big banks. And that's really like what we're all here for, right? Is like I'm going to struggle to say this, disintermediating between big banks and tokenized solutions or just straight up Bitcoin. If you want to use stablecoins, like I think probably, how many people have used stablecoins in this room at some point? I feel like 1, 2, wow, not that many, 3, 4. So less than I thought, but if you had stablecoins that earn yield, it would be a much more attractive solution long term. You'd have the self-custody of it. You'd have the ability to keep it in your wallet for whatever reason, be able to pay something with it really easily without that tax hurdle that, you use Bitcoin for something, there's always that tax payment, and then you get the interest on top of it. So it's a huge win. It just seems to be like that banking lobby is just so powerful.
Yeah, the big controversy was Kraken agreed to it and Ripple and all these other companies were agreeing to it, but then abruptly Coinbase came out against it because Coinbase makes a lot of money from giving yield to, like they have, I think, 16 billion in USDC deposits alone on their platform, and they're giving them like 3 or 4% interest for keeping them on there. So they came out strongly against it, and the banks had a hissy fit, and since then, and going back to the price, I think this is the big reason for the price. I don't know if you, on Crypto X, people have been talking about why is the price going down? What was the big sell-off last week? Sorry, I missed the early part. I don't know if you went into this. But there's a random company in Hong Kong. Then we find out Morgan Stanley's doing options. We find out Jane Street is the big option player that, in all likelihood, they're the ones shorting Bitcoin right now, down and whatever. In other words, the big banks are mad that Coinbase has come out against the Clarity Act, and so they're going to short Bitcoin into oblivion. And they're basically to get Brian Armstrong to acquiesce to their demands. That's what I see going on. And I'm just curious your thoughts and anybody else.
Yeah, I've seen that conspiracy theory going around, and there's like some things that are interesting about it. I do think like the banks have more power than a lot of people are giving them in this instance. I have some hesitations thinking that like these banks are shorting Bitcoin actively, because if the price moves against them, they get blown up, and it's like you cut your nose off to spite your face. It's like
sorry to interrupt. They're not shorting Bitcoin itself. They're shorting IBIT.
Oh, okay.
Yeah, they're shorting the BlackRock's
Yeah.
ETF.
Yeah, so like there's certainly more options to do that these days. I would be skeptical that they'd be taking an active position based on policy as opposed to just laying the lobbying. I'm sure that there's a lot of dirty tricks in the lobbying side of things. There are. And even crypto has a lot of the dirty tricks too. So they have this Fair Shake PAC, which is one of the most wealthy political action committees out there, and they're flexing their muscles with that going to midterms. They have $200 million to spend to unseat anybody who is against what they're doing on Capitol Hill. For Bitcoin, there's like this question, like, do we care as Bitcoiners about this? Do we care about clarity? I would say yes, because I do think stablecoins and Bitcoin are going to be intimately tied in the future. If you buy stablecoin because that's your first way of getting onboarded, it's a good chance you're going to purchase Bitcoin at some point because you're going to be long the debasement trade. You're going to be interested in getting out of dollars and into a different tokenized solution, which would be Bitcoin. But there's the other angle of this, which is like, I don't want to play your games. I just want to hodl Bitcoin. I just like want to self-custody it, which I think a lot of people can get with. But I think from the Hong Kong standpoint, with all the hedge fund stuff and the blow-ups, like going back to the price story we had here, there is certainly credence to a few hedge funds exploded in Hong Kong. And I was there last week for Consensus, and there's some conversations swirling around the Consensus trade floor that something did happen there. Something did happen with some of these hedge funds. So is it as a response to clarity? I don't think so, but it is like a really, really good conspiracy theory that I think lines up with some of the Epstein stuff too. Cool. Are you guys here for Bitcoin stuff or other stuff? Comedy show. Okay, well, Bitcoin is kind of a comedy show, so in a sense right now. We'll wrap up there. Thank you so much for joining. We'll be doing this once a month, so it's just going to be like a news roundup of stories from the last month. Appreciate y'all joining us, and stick around for comedy, I guess. And thank you to PubKey. Buy a beer. Tip your bartenders. Oh, yeah, Op Next, my conference is... Yeah, I always forget to do this. Thank you. Op Next is my technical conference. It'll be at the New York Times Center in April 16th. If you want a discount code or any information about it, come talk to me. BlackRock is speaking, so there's that. Coinbase, Blockstream, Chain Code, Brink, a lot of the big Bitcoin core folks are all coming, speaking on quantum, Bitcoin scaling solutions, and other topics. So April 16th at the Times Center, opnext.dev. There's my plug. Thank you.